So many of you may remember from last year, the theme was, is it really true? And what we looked at was how the national foreclosure data related to the Steamboat Springs real estate market. So this year we came up with a new question, and the question is, where is the real estate market today? So the analogy that we're using for today's presentation is a bouncing ball. And if you close your eyes and you drop a ball, you know it's going to bounce. The question is, when? So the outline for tonight is, first we're going to go over some broad market stats for 2012, and then we're going to go into the question of the day, which is, where are we now? And to do this, we looked at three different angles. First, we looked at inventory and supply. Then we looked at replacement cost. Third, we looked at affordability. And then we'll wrap it up. So jumping right into the broad market stats, the first chart here you see is total volume sold for all segments of the market. And as you can see, back to 2008, we've basically been flat. This next graph shows total volume sold in each category. And you can see basically flat since 2008. And in the condos in last year, we saw a little bit of a spike over 2011. And that was due to the auction at Trailhead Lodge and the absorption of some lower priced inventory. So the next graph, this is average sale price. And you can see in all categories we're consistently trending down. So this next graph is the number of transactions. And you can see we've basically been flat since 2008, except for last year we saw a spike due to the auction at Trailhead Lodge and the absorption of some lower priced inventory. This next graph shows the average sale price per square foot. And again, you can see we're consistently trending down. This graph shows the foreclosure data, and it shows the number of distressed sales as a percentage of the total market. So the first chart here shows volume, and you can see we're between 15 and 20% of our transactions were distressed. And then number of transactions was between 20 and 30%. Here's a new slide we added from last year, and this is the number of single-family building permits. As you can see in 2012, we're double 2011, and it's actually more than the combination of 2009 and 2010. So now getting into the question of the day. The information we just looked at is kind of what we call looking in the rearview mirror. And now what we want to do is look out the windshield. And the three ways we're going to look at where are we now is through first inventory and supply, then replacement cost, and last affordability. So from these three concepts, our goal is to see more clearly where we are in the real estate cycle. So like last year, we showed a slide with all kinds of headlines about foreclosures. This year, we've got headlines all around the country showing improving real estate markets. And this next graph here shows the U.S. and all the different markets that are showing price rises year over year. And if you look, Colorado showed a 6.6% increase. In Steamboat, we're not really seeing this. So we're not participating in all this excitement. So how does all this national information relate to Steamboat Springs? If everybody remembers back to 2007, while the rest of the country was in a real estate train wreck, here in Steamboat, our motto was, let's party. We were all building One Steamboat Place, Edgemont. Everything was great. Life was good. And then we all know what happened. Things changed. So let's take a look at the first part of the first variable, and that was inventory. And you can see here that the number of properties for sale in the market in 2009 was over 2,100. In 2011, it was 1,800, and today it's 1,600. About 120 properties on the market today are real estate owned or bank owned or short sales. So overall, our inventory has dropped by 25% since 2009. This next graph shows the different stages of foreclosure. And you can see here that in all of them, in 2012, we've dropped significantly from 2011. Another thing we did last year was we looked at some individual neighborhoods. So here are some of the neighborhoods we looked at last year. And first was Stagecoach Townhomes. And you can see from this graph that prices dropped off significantly, and the foreclosures hit this market pretty hard. Stagecoach Townhomes today, there were 9 sales in 2012, only 1 current listing, and there's a 1.3 month supply. And in the last 90 days, only 1 foreclosure notice has been filed. Another neighborhood where the foreclosures were pretty significant was Whistler Village Townhomes. Here the graph again looks like the previous one, with significantly dropping prices. And if you look, here's where we are today. 13 sales in 2012. The average days on the market was 163. There's 0 current active listings, and there's 0 month supply. And in the last 90 days, 0 foreclosures were filed. A new subdivision from last year is the Black Hawk Townhomes. This one is pretty interesting because this past year, we saw 3 transactions occur. Actually 4. 3 of them were distressed, and then the last one was not distressed. And you could see that they went from $700,000, $650,000, and $638,000. And then in January of 2013, the property sold for $765,000. And now there's currently only one on the market for $849,000. So the next question we were asking is replacement cost. I'd argue that over time, the price of existing homes just simply oscillates around replacement cost, depending on where you are in the real estate cycle. So this graph here just shows, with the black line, a slightly rising replacement cost due to inflation, and then the blue line is the price of existing homes oscillating around replacement cost. And what we've put here are a couple phrases that we hear from buyers at different times in the real estate cycle. So when the market's tight and prices are rising, I hear from people, it's so much more convenient to buy an existing home than it is to have to build. And therefore, you see existing homes selling for more than replacement cost. And you'll see developers starting spec homes, and there's actually profit to be made by building a new home. On the other side of the cycle, when we're in a market like today, I consistently hear buyers say, if I build, I get exactly what I want. So therefore, they're willing to pay a little bit more, or in today's market, significantly more, for a new construction home. So here's a real-life example. I think real-life examples show things a little bit better than just data. Here's a house at 2847 Whitewater Lane. This house sits on 2 building lots in the sanctuary. It's a very high-end home built by a great builder in town. And to build this house, it's probably going to cost you, with land, well over $3.5 million. The current listing price is $2.7 million. And this property's been on the market for almost a year at this price. So let's look at another example of new construction. And here you can see a house that was newly built in 2012, and this home sold for at or above replacement cost. So if we look back at our chart, this box here represents where we think we are in the current cycle. And we feel that the difference in price between existing homes and new construction is abnormally large on the downside. So the last variable we wanted to look at in trying to answer the question, where are we now, is affordability. So the question is, why does anybody own a home? Obviously, it's just to have a house and get out of the rain and be dry. So in most markets, affordability is the comparison of what it costs to rent versus what it costs to own. And in Steamboat, our market's a little bit different. So what we decided to do is just look back to when was the last time we saw these prices in our market. So here's a graph of the U.S. house price index. And you can see that right now we're back to 03, 04 prices. So we wanted to find a couple examples of homes that represented this change in the market. So here's 2 houses. They both sold in 2012 and 2004. The first one sold for $960,000 in 2012, and in 2004 it had sold for $1,076,000. The second house sold in 2012 for $296,000. In 2004, it sold for $315,000. So right off the bat, you can see by sale prices, we're more affordable than 2004. So does this tell the whole picture? Let's take a look at what have mortgage rates done over the same time frame. If you look at a 30-year fixed loan, in 2004 it was 5.92%. Today, it's 3.59%. So now let's look at those 2 homes and see what your monthly cost would be if you financed 80% of the home on a 30-year mortgage. The first house would have cost you $5,119 in 2004, and today it'll cost you $3,487 a month. So that's a decrease of 32%. The second house in 2004 it would cost you almost $1,500 a month to own. Today, it's just over $1,000. That's a decrease of 28%. So how has your buying power changed? According to the Consumer Price Index, $121 today has the same buying power as $100 did in 2004. So in general, things should cost more today. And if you look at a graph, here's a graph of the Consumer Price Index, and you can see in the same time frame from 2004 to 2012, it was consistently rising. So how has affordability changed since 2004? Today you have more buying power with lower interest rates and slightly less or equal home prices. Homes in Steamboat today are over 30% more affordable than they were in 2004. So where is the Steamboat bouncing ball? In most parts of the country, real estate is on the rebound, especially in our feeder markets, the biggest one being Denver and the Front Range. Local inventory is down. Existing homes are priced at an extreme below replacement cost. And last, owning a home is more affordable today than it was in 2004. Just like in 2007, when most people weren't paying attention to what was going on in the rest of the country, today we think the current buyer in Steamboat Springs is not paying attention to what's happening around outside of our market.